All right, so one of the channels on my Discord is this video request channel. It'd be great if more people use this, so I encourage you to use it. This is a place where you can basically request any kind of video that you'd like. So if you want me to go on YouTube and if you have a certain video that you want me to check out and review it and talk about it, I can do that. Or if you want to use this channel to just let me know about a video that you want to see, questions on a topic, I can do that as well. So user Actung here, he wanted us to check out this this YouTube channel, and so it looks like this channel is this person is logging their trades and just logging their progress. So let me go ahead and go to the most popular videos here, and I've already watched this first one. All right, that should be a little easier for you to see. So he's about to take a trade here. The market's in a downtrend, and so he's gotten short. So I mean, the very first thing I see that's good is the market is going down, and he's trying to get short. You know, that is kind of the first rule to be following. Also, shorting below the moving average, and also taking a trade below a bear bar. So these are all good things. I know it's hard to see with the quality, but he shorted with 10 contracts, and he has one, which is a scalp position of 8 contracts, and he's going to try to have a runner of 2 contracts. So looks like he's about to get out of the scalp portion. So doing it this way of having a scalp and a runner, I think that's perfectly fine. That's great. I don't typically do that. I either normally do one or the other, but I know it's perfectly reasonable to do it this way, and it makes a lot of sense because often the market will let you out of a scalp, and then what he's going to do here is move his stop to break even or break even plus a couple ticks. So this way you get a scalp, and once you get the scalp, if you get stopped out, no big deal because you already got your profit. But if it keeps going down, then you it's almost like a risk-free trade there. So he's trying to get his runner, and I'll speed up the video a little bit here. What he's going to do, he's going to manage this runner. So he's going to move the limit order up to these lows here, and he's going to kind of get out prematurely. So my thought when I'm looking at this, the way he's managing it a bit early here, I would rather leave my stop order where it is, so about break even. And then I would actually be moving my runner down instead of trying to bring it up. So here he is managing up further. Okay, so he just got out. So my thoughts on that: the market's in this bear trend here. Here there were 6 bear bars down, and now the market is looking for there to be a second leg off of these 6 bars down. So what we have here, these 3 bars, that could be the second leg. That could be enough, but there's also a chance here that the market's just going to dump down and have some big move down. You'll see that a lot when you have a larger bear trend, and then that trend is somewhat controlled. Like this is somewhat, you could draw channel lines in here. That's somewhat controlled. Then when the market sometimes needs to go too far, and then it'll reverse. So to me, I'd be looking at this if I was short, and if I had my, if I had my stop a couple ticks. So no matter what, I had some profit locked in. I would go ahead and move my target down in case the market does dump down like that, and then you're basically catching this large last move that the trend would have. So I thought the entry was reasonable. So 6 bear bars down, and then you get this 2-legged pullback. So a bull bar here, a little pullback, and then 2 more bull bars. So it's a 2-legged pullback in what is a larger bear move, and then getting short below the moving average. So I think that's all good. I just think at the end, I would rather try to capture more out of a runner than managing it early like that. And I think this is great, by the way, just trying to have, so many people on YouTube are trying to prove something. And this is great just to go on and just log your trades, like this person shows their losers as well. I wish I had done this, like 10 years ago, just recording my trades and having just treating it as a log, and then you can go back and review your trades. Even great like basketball or football players, they have coaches and they review their film, and the coaches talk about what happened and how they could do better. I think this is a great way to learn and get better. Let's look at this video here. All right, so they have a sell stop order. They're trying to short, it looks like at the low of this bull bar, selling below the moving average. So I can tell, so once the order goes in, they're going to try to put their stop above this, and they're going to go for a profit target. So it looks like they're going for 1-to-1. I like how the profit target is going to be right around this. What moving average is that? This maybe this is the 200 moving average, a larger moving average. So I like how the profit's going to be right around that. So trying to get out basically right before that. So it looks like what he's trying to do here is treat this as a trap. So bulls that were buying here, then once the market goes below it like it did here, then he's getting in where the bulls are exiting. Bigger picture, this has been in a bull trend. It's kind of off camera for you, but larger move, it's in a bull trend. And then more recently, there's this trading range. Who is being trapped here? The bulls that are buying up here. They're buying above this this little pullback here to the moving average. They're trying to buy a second tree long here. And then those bulls are getting trapped as this move goes down. But they're seeing it as a trading range. So probably they're going to be holding on and buying more above a bar like this. So he got out of the trade there. So people were buying up here, and they're buying more, treating it as a trading range. And then what he's doing here is betting that they'll get out below this bull bar. And you can see it did move down fairly quickly. So he's taking this trade as a trap, and I think that's good. I mean, there's a lot of room in here from here to the low of this trading range. There's really no strong resistance until you get down here, and it's also getting out right before the big moving average. So, I think that's good. Just kind of doing it as a scalp and a trap. I think my concern is because it's a trading range, I think there's actually going to end up being more buyers below this bar than there would be sellers. So I think if someone was buying here and they put their stop below this bar, I think that's a mistake, because a trading range, that the stop often does get hit. So he has the right idea here. Buyers are putting their stops here, and that's a mistake because the market's probably going to come down and hit those stops. I would be hesitant on trying to sell here, because even though a trap is happening, you're selling lower. You're selling in the lower half of the range, and I think it's more challenging to be trying to do a trap here because you're lower in the range now. I think what a better trap would be selling somewhere up here. So there had been I think instead of trying to take this trap here lower in the range, I think it'd be better to be looking for a trap higher in the range. There had been a bigger bull move up that is now transitioning into a trading range. And with it being a trading range, you can see all the little attempts that the bulls made to go higher here, and then they failed. So once we're in a trading range, then we're failing to go high up in this range, then I like the idea of trying to take the trap up here. And I can see he had his risk and reward drawn in here. So it looks like he was trying to do a trap in here. So I think that's good. I think this trap is better than this trap, and that's because of where it is relative to the trading range. This one's higher up in the range, and this one's lower. So if I was going to take one trade out of these two, I would prefer this higher trade here. All right, so let's look at one more. There's one that I wanted to check out here. All right, so this one is a 2-to-1 risk reward ratio. So he's already short. Putting a stop up above a recent high up here, and then going for 2 times his risk. The stop placement, looking at it, I'm kind of concerned with the stop placement. I think where he has it, you see how it's kind of in the middle of this move down. I would rather either put it directly above the signal bar here, or put it higher up somewhere up here. This is up here would be more of a major high, and then here, this is still kind of in that range where the market can pull back and get it. It hasn't dropped enough for this to really be a major high yet. So I would say either I'm putting it here and keeping my risk relatively small, or I'm putting it up here, and I'm having I'm getting my higher probability from being up here. But putting it somewhere in the middle like this. It's called a skunk stop because it's skunks get ran over in the middle of the road. So, that's my issue there. Just the stop. I think the trade looks like it's the right idea. So what he's doing, you can see he has his channel drawn in, and then the first breakout of this channel should at least test down to the low. Oftentimes, when you see this breakout of the channel like this, it'll pull back and then break down below that. So that's what he's betting on here. Looks like looks like to me like a wedge top here. So 3 pushes up. It's a short below the moving average, below a bear bar. So that's all good. Let's speed it up a little bit. He probably doesn't have to manage it yet. He probably doesn't have to move it down, break even yet. But once it goes below this big bear bar, then at that point, I would go ahead and move my stop to break even. So I like how he's going for 2 times his risk in this situation. Market we have this higher range up here, and the market has broken out below that. And you can see the pullback to test the range. A second pullback to test range. Now we're going lower. So if the market's going lower, it's probably going to be testing lows somewhere down here. And he has this yellow bar, which is marking some of the prior lows. So I think 2 times your risk in this context, it's basically a breakout test of the trading range. Then there's room to a lower target down here. So I like going for the swing trade in this situation. So by now I would have moved my stop down to break even. It's so close now, I would have moved it pretty far down. So he's basically just trying to get out at that price, and so it looks like he'll get it. So he got it. So that's good. I think doing the swing trade there is good. I would have managed my stop a little bit sooner. And also, I think I would have just placed my stop basically right above that signal bar. I think where he had it, what he's trying to do is he's trying to avoid these little pullbacks that stop you out. And that does happen. But that little pullback that happens, I think, will happen often enough up here so that all he's doing here is just increasing his risk enough. All he's doing is just increasing the risk to where he'll basically be stopped out the same amount of times, but he's just losing more on those times. So I would take that slightly lower probability and just get out here. And then that's where I would put my stop above there instead of putting it somewhere in the middle up here. So either you're putting it above that bar or you're putting it way up here, and you're just kind of letting you would allow a deeper pullback and just basically watch and let the trade play out. Now, if you put your stop up here, you don't intend for that to get hit. You would exit before it. So you would exit somewhere over here, like the market gets above the moving average, and then double bottoms, then starts moving up. Then you would exit. So maybe two different styles there. In this case, it looks like it'd be best to just put it above the bear bar there. And I mean, this is a wedge top, 3 pushes up. So I think that increases the chance that this third attempt down is going to be the right one. You can see this little bear bar you would have lost if you sold it below this and tried to exit and got stopped out above it. But then once you have this wedge, that's a third push, third attempt, better chances that your stop is going to be correct above the signal bar. So I encourage you guys to do something like this. Start a YouTube channel and record your videos. And you're not trying to impress anyone. You're not doing it to only show your wins. You're doing it to really just post all of your trades and document it. Like I think what he's doing here is great. He shows his losses and his wins, and really he's doing it for him to show, so he can review it, and it's a lot of fun. Like documenting your trades like this. You can look back 6 months or a year later or 10 years later and look at the trades you're doing, look at the market. So I think this is really valuable. I encourage you guys to do that. And if you want me to ever review one of your trades, then let me know on this video request. Or if you ever want me to do a different kind of video, you can just post it in here. I'm sure I'd be happy to make the video for you guys. So that was interesting. Thank you, Actung, for letting us know about that. And I hope to do more of these in the future. So I'll see you guys next time.